Hello, and welcome to TMX Presents the podcast. My name is Richard Goodman, Managing Director and Global Head of Capital Development at Toronto Stock Exchange and TSX Venture Exchange. I recently had the opportunity to interview two Canadian icons, Arlene Dickinson and John Ruffolo. Arlene, an entrepreneur, investor, best-selling author, dragon, and the force behind District Ventures, where she has led numerous Canadian companies to scale globally. John, one of Canada's most influential innovation investors, founder of Mavericks Private Equity and a champion for building the next generation of Canadian innovation leaders. The core of our discussion is the path to ensuring Canada's future prosperity and sovereignty, which, as John and Arlene argue, hinges on a unified Team Canada approach to business and critically solving our long-standing issues with accessing capital domestically. And as a powerful example of what is possible, we reference the extraordinary performance of the 2025 TSX 30, where the 30 top performing companies on the TSX delivered an average return of 431% over 3 years. This success is a vivid proof point for why focusing on domestic growth and capital is an existential imperative. Here is my candid and thought-provoking conversation with Arlene and John. Arlene, John, thank you for being here.
Pleasure.
This year's TSX 30 cohort delivered returns of an average of 431% and added nearly $360 billion in market value over 3 years. What does such exceptional performance tell us about the strength of the Canadian economy and the public markets? And how do you see this level of growth contributing to Canada's economic transformation?
Only 400+%.
That's it.
What have you done for me lately? Wow, that's quite eye-opening. I would say, fantastic kudos, number one. Number two, I do think today the importance of the TSX 30 and the broader TSX has never been as high it is right now because of the question around sovereignty. And sovereignty is all about controlling your destiny and mapping out your future. And one of the aspects around sovereignty is having the capital and the entire capital ecosystem beholden under Canadian laws, regulations, etc. And so I'm so glad that you're on a high right here because it's never going to be more important than it is in the future for us.
Yeah, I mean, that's well said. I think that exceptional returns show and prove that the market rewards exceptional execution. And so those companies executed. And so the market rewarded that, and that's why you have the return profile you do. And I think, that capital that's generated from that actually creates jobs, and it helps fuel the economy, and it drives, more investment into Canada. This is how transformation happens in our country. So I think that this is something that, the TSX 30 is really just an indicator of what really I think the country yearns for, which is the ability to invest in ourselves and to prove the opportunity out by growing businesses effectively and executing well.
In your experience, what common qualities, could be leadership, execution, strategy, or otherwise, enable companies from such different industries to become top performers?
I mean, I think it's the same no matter what industry you're in, frankly. I think it's the same playbook, and it's a boring playbook. People want to have these fun, exciting things, but frankly, it's a boring playbook, which is a relentless focus on margin, a relentless focus on your customer, ensuring that you're delivering what you promise, having the best team in place. I mean, these are structural truths that have been true in strategy and business for forever. And I think what happens is people get distracted by shiny objects, and they think that there's shortcuts to building these businesses. There isn't. It's like the boring playbook, stick to it, focus on the customer, the margins, the market, you win.
This question is specifically for you, Arlene. District Ventures is focused on supporting and scaling companies in various sectors, such as food, beverage, health, and wellness. What key strategies have you seen that allow consumer brands to scale from local to global markets? And how might those insights apply to other high growth areas, even outside of your particular focus?
Yeah, well, when I raised my first fund with District, we were literally the only fund solely focused on the CPG, food and beverage, health and wellness space, which says something. I mean, we're an agricultural nation that actually has a depth and a wealth of resources in our ground, whether it's, everybody talks about minerals, but we have all sorts of commodities. What are we doing with those commodities? Why aren't we turning them into products that we can scale with and sell? And so that's the focus of the fund, through my second fund, and we'll be raising our third fund here, but we're trying to build infrastructure and support for these businesses that are in the space. I think that's important to note, because what I'm going to say next about what makes them successful is access to capital, of course, is one of the key things that this market needs to have. But it's really, again, back to that same old boring playbook. It's knowing the market. It's getting distribution first before you spend a lot of money on advertising. It's making sure that your margins are in place and they're secure and that they're good. It's ensuring that you have that, as I said, product market fit. So, the fundamentals are rooted in consumer understanding and delivering what the needs of the market are and innovating. And with agri-food, what you'll find that the businesses that are innovating are these earlier stage companies. It's not the big corporations. I think that's true in any sector, frankly, whether it's technology or whatever. It's not the big corps that are innovating. It's the startups or earlier stage who are taking the chances, putting the risk in place, and doing the things that they can't do. And that's happening in the food space in Canada in a meaningful way. And the businesses that are succeeding are the ones that are paying attention to the marketplace.
Real potential for disruption.
Real potential for disruption, real potential for billions and billions of dollars of economic value into this country by focusing on this sector. It's critical.
John, you helped invest in some iconic tech companies like Shopify, many others. And you've actually said Canada needs 10 to 20 more Shopifys.
Yes.
What do you think is missing from Canada's tech system today, and how can the public market platforms like TSX help create more world-leading Canadian tech companies?
Sure. In order to scale successfully, they really need three massive ingredients. One is an access to capital, access to talent, and access to customers in markets. I would say the one that was always problematic was the access to customers in markets. And now I think the Canadian federal government and provincial governments are realizing that they could be a massive customer to many of these technology companies, which is great to have that, because particularly as you have customers who around the world having your own governments and large corporations in Canada procure your services is a huge leg up. So we're right at the front end of that. So I'm quite excited about it. Let's watch the execution of this. Now, what's becoming again a problem is the access to capital. As Canada is looking to assert its sovereignty, so are other countries all around the world as the global upheaval is occurring. So what's happening is that Canada doesn't naturally form capital like they might in the United States. Frankly, probably with the exception of the province of Alberta, no one is really generating net capital. So it's going to be more about preserving the capital that we have in this country and not exporting our capital as liberally as we have had in the past. It doesn't mean to be protectionist, but as Arlene had indicated, food security and supply is a massive sovereign issue, and we're going to need Canadian capital to support that. The public markets is a part of that ecosystem. Frankly, it's really the last stop of that ecosystem. So every chain in that ecosystem needs to be strong domestically, and that includes our public markets. Otherwise, what happens is if we do not have a strong public markets system here, and these companies do break out, they're going to end up going public in the United States, seeking capital in the United States, and slowly over time, it's a slow bleed out, and that's the real problem for Canada.
Yeah, 100%. I couldn't agree more. I think the procurement point in particular is a very important one.
Yes, procurement, and we're seeing already a theme of access to capital in both your responses. Clearly, that is something that is essential for these young companies and growing companies. Do you see signs of this improving to where they once were, or maybe even beyond that?
I think it depends on the sector you're speaking about. I think, the government's identified key sectors that it's going to focus on, and there's been capital that's going there. But we can't continually rely on the government to solve all of our problems. I think we have pension funds that need to invest alongside venture and private equity. I really believe this. I know that this is not always a popular opinion, but I really believe that pension needs to come back into Canada in a meaningful way. There's trillions of dollars in capital sitting there that pensioners would probably benefit from investing in themselves and probably would want to. I think that it's a challenge to get Canadians to reinvest in themselves. And it remains a challenge, but it seems to be loosening up. But there are not enough. The venture asset class has gone through a lot of challenges in the last 5-6 years, potentially. Private equity has gone through its changes. We are evolving as a nation in how we invest and the classes that we invest with, and we need to be ready to kind of weather that storm and continue to ride it out and putting our dollars back here.
It's interesting you mentioned pension funds. John and I were on a committee that we put together at the TSX a few years back just for that purpose, to try to
get them
reach out to Canadian pension funds, talking to them about an innovation fund and various other solutions that could get them to invest more in Canada.
How'd it go?
Well,
how'd that go for you?
You want the next
question.
I think the challenge too is with a lot of the pension funds in general, even the ones that do invest in fund of funds and et cetera. I mean, you end up with this notion that if you're not writing a check for $100 or $200 million into something, then it's not going to be worth their time and effort. And while I understand the mechanics of that, it's a resource-driven, but it's a resource-driven point. Those resources can be freed up. They have enough dollars to be able to put more resources into whatever asset class they want, and they can come downstream a little bit with smaller check sizes that are going to make a big difference in terms of building the ecosystem.
You mentioned,
that's my point, yeah.
You mentioned, so this is the very first comment that I got leveled at me by countless folks back in 2011 when I formed Omer's Ventures, that no matter what you do, you'll never move the needle. And only 3 or 4 years later, that stake that Omer's had in Shopify, if Omer's did not sell it, would be worth up to $20 billion. So that's not a
it's not an
needle
excuse.
mover. Like, come on.
Yeah.
And that's number one. Number two, I'd like to remind all the pension funds in Canada that they're a creature of public policy. They exist by virtue of the Income Tax Act, the Pension Benefits Act, and their particular charter. And their stroke of the pen risks in that, back in 2006, we shut down income trusts because it hollowed out corporate tax base in Canada. Well, so does a pension fund when it makes a buyout private equity decision on a Canadian company. So, and we've agreed in the public that that's okay public policy, and that drives down the cost of capital. So your advantage is a result of public policy. So to suggest that public policy does not matter, I think, is a big stretch. So while I stop short of forcing an allocation, because I think that that's a dangerous path as well, helping increase the economy and benefit the economy so that you can get more pension fund members is probably a good circular calculation for you as well. So I think it's to everyone's best interest to redirect your focus back into Canada. Not solely, you don't want to do that, but remember, the best investments that I've ever made, at least, in small and medium-sized businesses, have been in my own backyard. And the reason is, you know what you're getting. You know the laws, you know the people. And the risk premium goes up dramatically as you get further and further away from your own backyard.
Yeah, and I would add to what John said that, quotas are a no, but mandates are a yes. Right. And I think mandates can definitely change the way they think about how they are going to invest back in this country.
I'd also add, by the way, I think the value of a sovereign wealth fund for Canada is fascinating.
Yes.
Because we've got all of this disparate assets and capital strewn across a whole bunch of federal departments. And we're housing them in one place so you can see what we have. You convert a lot of the grant-making system that we have into investments. And by the way, knock it off with the foreign-based grants. That is a complete waste of money. And all of a sudden, you start to see that the math of developing a sovereign wealth fund, it doesn't need to be exclusively invested in Canada, because if it's public markets in there, it's naturally globalized. But what it does, it seeds the opportunities for future generations, especially if we're serious now that we want to be a superpower of energy. Well, if that's the case, hive off some of those proceeds for a rainy day, because Canada is going to need this.
Speaking of Canada, it's a great segue to my next question. Many growth companies choose to stay private longer in Canada, with some founders wanting to remain private while expanding globally. Mm-hmm. What are the key considerations for a company deciding whether to seek a TSX or a TSX venture listing versus staying private with venture or growth investors? And what have you seen are the advantages and trade-offs of each path of scaling a business?
I think you go public for liquidity and capital access. I think you stay private for speed and focus. And I think that you should, at some point, you have to choose the path that's going to give you the most learnings per dollar, is how I might characterize it. So I would challenge the legal environment in Canada and other aspects of going public. It's burdensome, it's expensive, it's time consuming. It needs to be easier. It needs to be more accessible. And I think you'll see more companies then that would actually consider it and do it. But right now, there's obstacles in the way for companies who could be public to go public. But not, it's a time and place thing, right? The TSX proves how valuable it is to be a public entity, but not everybody's ready for that. And so helping to identify the ones that are ready, I think, is part of the challenge.
I would just add, so you are weighing the higher friction,
right?
But ultimately, having the public invest allows your existing investors to get liquidity. It's a currency for acquisitions. Your employees really like it because they're in control of liquidating whatever right. holdings they have. The other challenge, though, and we need to figure out how to do this. 20 years ago, going public meant raising $40 million, $60 million, and we had a whole mid-market ecosystem of players that would be market makers, having research coverage, et cetera. And as you know, over the last 20 years, that's been almost eradicated mm-hmm. with only a couple of players really playing in that space. So it's made it challenging for companies who actually like the idea of going public, but their market cap would be too small. And so the waiting and being private for longer is not even a choice in many cases. Mm-hmm. It's a, let's wait until our market cap, gets to a level, it used to be a couple of $100 million, even $100 million. Yeah. And then it just slowly started increasing. And now And then, once it crossed $1 billion, now, folks are saying, well, maybe it's $2 billion. I don't know what the right magical number is, but that starts to rule out a lot of people that might have liked to take that route first, but are worried that they'll get caught in no man's land and there's no coverage, et cetera. And despite increasing their performance, they might get stalled in there. So I would say that's one of the issues that I think that we still need to solve as a nation here.
Agreed.
Yeah, we've seen an interesting transition, particularly in the venture space, the public venture space, where new players have come in to fill the void. It's not completely filled. There absolutely needs to be additional solutions out there. But with the disappearance of many of the independent boutique investment dealers that focused on that particular market, we've seen some service providers that focus on bridging relationships between these small public companies or wannabe public companies and transactional brokers, family offices, angel investors, various others that are interested. They're just not the typical investment banking client. These aren't institutional funds. These are various investors around the world, around Canada mostly, that participate in these types of financings, love the opportunities, but we need different mechanisms to connect them with the investable opportunities.
Yes, and mining and resources is a great example where you see that happening. I mean, we were the mining financing capital of the world. We sort of lost a little bit of that steam. There is no reason why we shouldn't be able to reclaim that. And it's a fascinating ecosystem that's far more informal, but quite effective. I think that's a great example on how you could rebuild that ecosystem.
Remember all the junior mining companies that were on the exchange years ago, right? They've all kind of gone away.
Yep.
What about on the access to capital side? We have seen, maybe not in the last couple of years because things have tightened in the private markets, but we've seen a growth of capital in the private space compared to the public space that one could argue private capital dwarfs public capital right now.
I'd say that's certainly true in the United States. I'd say it's probably less true in Canada. Again, it's due to capital formation. That, in the United States, it's an interesting development. You could see it was already happening around 2017, and we were predicting it back then. You have this very much a barbell approach. You have these massive capital pools, whether they were in private equity or, in traditional venture, that, were raising 10, 15, 20 billion dollars of capital. And you're, in a bit of a hollowing out in the middle, and then a whole bunch of niche funds that were focused in on particular segments of the marketplace. And so it's a little bit of, you had the Walmart, tell me what you need, and you had these little boutiques. In Canada, we really didn't have the large Walmart type funds with massive capital pools. There's a few that have some decent size. We have a bunch of smaller funds, but again, on the private side, the access to capital is a big issue, and it really comes through that at the end of the day, if you don't have a strong supply of domestic capital, it is very difficult to attract foreign capital, because the first question they ask is, hey, you're so good. Why isn't your own backyard supporting you?
Right.
And then what do you say?
In your view, how should a high growth company balance rapid expansion against building profitability and cash flow as it scales?
In the agri-food sector, cash flow is king again. It is it's everything. Growth at any cost, those days are gone. People are looking to ensure that you actually can have a solid road to profitability fast. And that means being very disciplined about your growth and not taking on markets that you can't afford to take on, and not expanding so rapidly to make sure you have a top line that's impressive, but to make sure that you can actually get the fundamentals of the business right early stage. So I think it's cash flows king.
Yeah, I mean, we've been very focused on profitable growth, but that's different from paying dividends.
Yes.
We like to invest in businesses that if they're not profitable today, we can see within a short window their ability to be profitable. It doesn't have to be wildly profitable, but the driving of profitability drives discipline and ensures that your unit economics are as competitive and as tight as they need to be. What we hope is we use the excess cash flow to reinvest in the growth of the business so that it could become a global dominant player. Where I think Canada sometimes goes a little too far, frankly, is focusing in on the dividends, because did they run out of ideas on how to actually use their capital to be globally competitive?
Innovation.
So I think sometimes we tend to focus too much on, you're a good dividend paying stock. Take the pedal off of the growth because that's what investors would like. It's like, well, it depends. And there are good examples where you are generating such substantial cash flow that, of course, give some to your shareholders to support the price of the stock. But that's what it really is. As growth investors, we look at that as they just ran out of ideas on how to growth, and that's the time for us to exit.
Yeah, and I would also add to that I think that more operators on boards would help govern this more effectively, because you don't have enough operators on boards because an operator in the business is less likely to pay a dividend. They're more likely to do what John just said, which is reinvest in their business, up their game, make sure that they're getting the right automation, innovation, everything happening in their business. When you get too many lawyers, accountants, and finance people on boards, you lose that operational oversight. And I think putting more operators on boards is something every business should be thinking about.
Just onto your point, during this past election, I was busily architecting a bunch of tax policy ideas, and one of them is exactly supporting what Arlene just said. If you look to, and they call it the Estonian distributed profits model. This is a model that Estonia uses now, albeit it's a very small country, but other countries are looking at this. You pay 0 corporate income tax as long as you reinvest it into the business. Mm-hmm. But the moment you make a distribution, you're taxed. And it's the incentivization to reinvest your profits into increasing productivity. Canada's got a massive productivity issue, and the productivity is really a direct correlation to the lack of investment in robotics, in AI, in those things that do replace human labor for machine labor. And hopefully we don't have a massive labor displacement, but rather a shift. That's where value creation is really driven. So having those right incentives, perhaps to help drive that mentality, will drive all of these companies to greater and greater heights.
John, you describe a Team Canada approach, where Canadian investors, pension funds, and experienced entrepreneurs rally around startups. And Arlene, you noted that many of your fund's backers are veteran entrepreneurs who add expertise. How important is this domestic network of support in scaling companies to global success, and how can lawyers, issuers, and other TSX stakeholders strengthen that ecosystem?
Well, just going back to the Team Canada approach, why is that so important? Particularly now, as I had indicated earlier, so the world is going through a global reordering, and we're going to see this deglobalization move to regionalism, and in some cases, countries, in essence, going it alone. And in Canada, really for the first time in, I'd say, in at least 3 decades, we've realized the importance of sovereignty and mapping out our future direction without undue influence by other countries. And as I indicated, capital is that fuel for the driving of the future. And because Canada is not a strong, naturally capital formation occurring here, our strength would be coming together as a nation and not fighting against one another, but looking at the competition outside of Canada. And the opportunity is by working together and having the ecosystem worked in a cohesive fashion is really going to be our key differentiator in order to survive this. And, I think we're talking a lot about it. We're talking about Buy Canada, et cetera. These are not slogans. These are actually what we need to do from a tactical perspective, or else Canada will struggle for the future.
Yeah, I mean, I was part of the Elbows Up campaign, and a lot of people said what John just said, which is it was a slogan, it was empty, but it actually wasn't, for exactly the reasons he just talked about. Now, its moment has probably passed in terms of what it needed to do at the time it did it, but now now we have in our minds we need to buy Canadian. Now we have in our intent that we have to support Canadian, and the interprovincial trade barriers, the challenges with procurement by our government not going here first because we're trading off with other trade agreements, some of the things that we should be buying here at home. There's a reason we don't buy some of these things at home, and that's because we promised that we would buy them somewhere else in order to get something in a trade negotiation somewhere. And it's complex and it's complicated, but that doesn't mean it can't be solved. And our government has to focus highly on this point. Procurement has to happen here. Canadians have to do their part. Provinces have to do their part. And we have to come together. This is an existential crisis for our nation. If anyone's not thinking about it that way, they're missing the story. They're missing what's actually happening in our world. To John's point, we need to, Canada can be a hero on the world stage, or it can be a victim to the world stage. We have that choice right now in front of us. And the only thing that will make us become that hero is when we believe in ourselves enough that we stand behind ourselves, beside ourselves, and in front of ourselves. I'm very passionate about this. I get frustrated when people say it can't be done. That they point to the past and all the challenges. The past is the past. We have to get past that, and we have to look to the future, and we have to determine what we can do now to stand up and to win. And that means standing together.
One of your posts early in the year stands out to me because at the time I was contemplating writing something very similar, which was, let's take this very seriously.
Yeah.
This was in the very early stages of the rhetoric that we were hearing down south, and your comments were, don't ignore this. This is serious stuff, and I'm glad you did be vocal about it, and John, you've been vocal as well. I don't know if there's anything else on the subject you want to talk about on that front, or we can move on.
And I think the canary's died. The canary in the coal mine has died, and we need to, and the warning has been, it's there. And we're naive if we think otherwise.
We're going to look back and use this moment that it was actually a blessing.
Right. An opportunity that we either missed or we blew, right?
Yes.
Right.
Last question. Looking forward, are there particular industries or emerging technologies that you particularly favor? And how should retail investors and entrepreneurs position themselves to take advantage of these trends?
I will speak from the agri-food space. I think agriculture is a huge sector of importance in our nation. I think it has to be called a critical sector by our Prime Minister. I hope he does identify it as a critical sector. I've heard I was on a call today and somebody said, we've romanticized farming. We don't romanticize tech. We don't romanticize building a plane. We don't romanticize any other industry, but we've romanticized farming to the extent that we don't treat it as seriously as we should be treating it. It deserves the attention that it needs, and from that farm to that retail experience and to the marketplace, it's incredibly important. We will not have sovereignty if we don't have food security. We will not. You see what happens when countries take off food supply or water supply. People die and they lose the battle. And so I think our biggest opportunity right now is in the agri-food and agricultural sector. Not bigger than, a big opportunity. I would say, big in AI, big in technology, big in aerospace, big in defense, big in housing, big in clean tech. I think that's the group. Right now, that group I just mentioned is all out there, but agriculture is not sitting in that group, and it needs to be sitting in that group. It's critical.
I'd agree.
So, yeah.
Yeah, so I can answer that question in terms of where are we placing our growth bets, and it's really under the umbrella of sovereignty. So again, these are those critical industries that we've probably taken our eye off the ball, but now have realized that it's critical that we have the control over its future. So as Arlene indicated, so it's sovereignty over food supply, sovereignty over data and communications, the energy and resource resiliency, healthcare, mobility and transportation, and defense, and that includes both physical and cyber defense. I'm going to add one more bonus one because it started to become very clear to me is sovereignty over our monetary system.
Yeah.
And that
you've been talking a lot about that.
I've been talking a lot about it because the other side of trade is you got to pay for it. And if you have loss of control over your monetary system and ultimately your capital markets, that is a very serious concern. And so that theme, I think you're going to see in the next 5 years really rise above the crowd.
I like that framing, John, a lot. I think that's a really effective way to frame what matters.
Well, I just can't thank you two enough. This has been a phenomenal conversation, and I'm sure for the audience that listens to this conversation, we covered so much ground here, so much to talk about, and I can't wait for the responses out there and see what kind of conversations this sparks in others. Thank you for tuning into this episode of TMX Presents, the podcast. Visit tmx.com/POV for more market insights.